All right, morning everyone. Let's keep going. Okay, fresh off the heels of some sort of correction in U.S. equity markets, we saw over 1% on the Nasdaq. It's very, very exciting just to see a move of over 1% in the equity markets is something we don't get to see even every month anymore. But I think the important thing is yesterday was the start of earnings season in the States. It came only after hours, and that was Alcoa. Did rally on better than expected earnings and revenue numbers. So, this is what probably is going to be the market's focus over the next few weeks. The one thing in the sell-off yesterday that really got things accelerating to the downside were the technology shares, more specifically the high flyers, the momentum stocks, the things like you see there, Twitter, Pandora, the Yelps, the FireEye, the Netflix, the Teslas, Facebooks. They were all under significant pressure yesterday. Most of them falling more than 3 or 4% on the day. So really saw a big correction in some of those shares. And I think, as we talked about the last couple sessions, the Nasdaq's going to be really the one to watch for us. It's going to really be the leader, I think, for what we are going to need to focus on, and it has been leading markets to the up. So if the markets do start to come down, it'll probably lead to the down as well. So we'll keep that in mind and on our radar over the next few weeks. All right, we did see a little bit of follow-through out of Asia. All the markets really down over there. We saw Hang Seng in particular and the Australian market down over 1%. The rest of the markets corrections were benign, but we saw some of the mining stocks under pressure a little bit in Australia, and we had some big data releases with CPI and PPI numbers in China, both coming in tamer than expectations, but really just following on the back of U.S. Equity sessions. Nothing really in particular that's probably gonna drive markets too much. I do think that the PPI numbers in China that were a little bit tamer than expected will probably open the door to potentially further easing if needs be. I know they've potentially guaranteed 7.5% GDP, so those guys can continue to come with stimulus if inflation is not a problem, and inflation is probably their only real worry. Right. Interesting chart that we found yesterday on expansions and recessions and the economy in the States. And we've had some people lately that have kind of been talking about U.S. This is the expansion period has been long enough now that we're probably starting to get closer to a contraction again and seeing a recession in GDP. And I think that people are maybe a little bit misguided, to say the least. When you can see here on the chart, the last 7 out of 7 times that we've had a recession, we've had the most perfect signal given to us by the bond market every time, and that's when the yield curve inverts and we get short-term interest rates at higher levels than long-term interest rates. And as you can see there, this little flat line at the bottom is the inversion level, and we're nowhere near that as we speak. And so and typically that kind of gives us about almost a year heads up, somewhere between 5 months and 16 months of a lead into when we actually get a recession. So the market will definitely see that coming. Currently, as we sit, I don't think the market sees it coming on the near-term horizon at all. So that's something that when it does happen, you want to be all over because it's one of the more accurate signals you'll ever see in stock markets. All right, no real corporate action to report out for the day. Like we said earlier, we did have some significant data pieces out of China. We also had money, M3 and M2 numbers out of Japan, which were a little bit, the M2 number was in line. The M3 number was a touch soft. And in China, like we said, we saw tamer inflation numbers than expectations, which will probably be a positive there for the government trying to really get the economy fired up. And then we also had Japanese tool orders just a while ago out in Japan. Then we've got mortgage apps in the States a little bit later today, and the release of the FOMC meeting minutes. A lot of people talking about these meeting minutes, because we've had some people come out recently, guys like Fed's Bullard yesterday that came out and made mention that he thinks that inflation has bottomed. People wanting to see what the conversation was inside of the FOMC to get a glimpse of what the real outlook for the interest rate environment is. So we'll wait for that number after our hours tonight, but it could have a big impact on equity markets. All right, let's get into the maps. All right, first thing we want to have a look at is the ALSI spot. Oh, the ALSI future here, sorry. All right. What I wanted to show is really we kind of coming back. We pulled back here to test support really more or less into the close. I actually think that we closed a touch above this level on yesterday's session. You can see this morning we're opening up above that. We're looking at, call it 46,550, where we really broke out from on this continuation pattern. And we've dropped that as of this morning. We're trading about 50 points below it. If we can continue to hang below this level, then I think that we really could be looking at least at some sort of a retest down to support, at least a support down to the trend line, which would take us down to about 46,000. And obviously, if we drop that, then we can continue to fall further. So I think, as we said before, that this is, it's a relatively significant level that we dropped here on support. If we can hold below 46,500, I think that would be significant, and we could definitely see some further downside over the next couple sessions. All right. The one thing that I will make mention of, with regards to the ALSI and what happened in the equity market yesterday, we had a big pullback in some of the sectors, but really the local stocks, especially the interest rate sensitive stocks, really held up well, and really giving confirmation to our theory that those stocks are completely dependent in the short term at the moment on what's happening with interest rates, not necessarily just here, but obviously in the States, which is going to drive interest rates here as well. On Thursday last week, when we saw the non-farm payroll number came in way better than expected, and we had the rise in interest rates across the board in the U.S. and in some other parts of the world. We really saw our interest rate sensitive stocks sell off over the past two sessions. We've seen the total opposite of that happen. We've seen interest rates pushing lower over the session, and our interest rate sensitive stocks, the banks, the retailers, the insurers, all really just trading incredibly well as the interest rates start to come down. So that's definitely what's been giving us the inside look on what's going to happen there. So you can really follow that around very closely, I think, on a sort of one-for-one basis in terms of the relative beta of what's happening there. So just keep that in mind. All right. We're looking at ShopRite here. ShopRite had a huge reversal yesterday on monster volume. I think we put through about 5 million shares of ShopRite, which is probably about at least 2 times, probably closer to 2.5 times average daily volume in ShopRite. And you can see they're really just popping up above what is kind of trendline resistance, and it's just been an incredibly consistent downtrend off of the top. What's also interesting is it lines up perfectly with the 61% fib retracement levels there, which you can see we bottomed at. And this is really a beautiful reversal in the fact that we were really consolidating down here around the lows of 53, 54 somewhere. And typically when that happens on the back of a consistent downdraft like that, then the breakout of the consolidation will in most cases be lower. So the fact that we reversed yesterday to the upside and reversed so hard, I think, is really significant. The fact that it was done right off the 61% fib retracement levels, also significant. Definitely an upside target here for ShopRite. Been a huge laggard to the rest of the sector and the index, and probably has some significant ground to make up. I'd probably peg a short-term target up here somewhere closer to the 200-day moving average, maybe a little bit over 160. All right, let's move on. Let's have a look at Mondi. Mondi making a little bit of a head and shoulder setup here. As zoom it forward a little bit, you can see there a bit of a head and shoulder setup. Maybe not completely classic in the fact that the head's not that high above the shoulders, but definitely shaping up to be a bit of a head and shoulder nonetheless. You can see there, I think we, for this to really be confirmed as a drop, we need to drop 191 on a closing basis. If we drop 191, I think that we've got about $10 of downside. And probably close to the 200-day moving average if we can drop 191 in Mondi. If we look at Discovery, not a real break. Yesterday, at one point, it looked like it was really ripping higher, and but we've definitely kind of flagged here a little bit off of support. Maybe another push higher in Discovery, and as you can see there, really trying to get back and retest the all-time highs, which I believe are at about $100. All-time closing highs closer to 98. So I think we at least probably going to get there before we would look to pull back. Another stock that's kind of popping up near all-time highs, but it's made a bit of a reversal here, is Naspers. And this thing is kind of looking like it could end up putting in a little bit of a double top, especially depending on what's going on with the NASDAQ. We obviously had a big sell-off in the NASDAQ last night. Tech shares got hit pretty hard on the back of that. Tencent obviously getting hit pretty hard in Hong Kong. I say pretty hard. It only fell about 2.6%, which is better than what most of the other high flyers have fared. But bottom line is we're going to get a lower open for sure out of Naspers this morning, and this chart will start to be looking a little bit double topish as we pull back closer to the 1300 level this morning. So just keep that in mind, that we did top out at literally the exact same level for the most part in Naspers, and it could be looking a little bit double topish if we really start to fade hard off of that level. All right, and the last one we're going to have a look at today is FirstRand, and we're looking here on a 30-minute chart as well. And we're going to take out that one little real blip that we had there, and you can see we're actually putting in quite a defined little trend line resistance for the most part. I mean, we've got a lot of tops here over the past couple weeks session. We're looking to right around 41.25 is really where we've been topping out. If we get above that on a closing basis, then I think that we'll have really popped up out of this consolidation pattern, and probably considerable upside from there, probably as much as almost around 50. And that is it for today, guys. Trade well. Thanks for joining us.